I'm Max Keiser. This is the Keiser Report. There's economics, and then there's Chutzpah economics. Stacy?
Max, yes, that's what we have all over the world today, Chutzpah economics. Here's the trickle-down Chutzpah. Mel Gibson, temple tries to shake him down. A Southern California temple took out a jumbo loan on its synagogue, a loan that it now can't afford to pay back. So what have they done, Max? Congregation Beth Shalom, located in Corona, California, sent Mel Gibson a letter requesting that he give them big money to prevent foreclosure. They wrote, quote, "Our proposal to you, Mr. Gibson, is since you have been cited as an anti-Semitic and have denied those allegations, what better way to prove to all of your fans and the naysayers than to endorse and help raise funds for our cause, SOS, Save Our Synagogue."
It's a shakedown.
Well, TMZ calls the move similar to a dude accosting you for money at a gas station.
Except they want gefilte fish.
Well, it is kind of what you see happening around the globe. You see banks everywhere, in every single nation in the Western world in which the citizens are hugely in debt. The banks are hugely in debt as well. And they're saying, we're so in debt, bail us out.
Yeah, exactly right. It's a microcosm, if you will, of the entire global market, where you've got folks that are shaking down governments and shaking down the citizens for bailout money for mistakes that they made. You know, Wall Street made a bunch of mistakes, and they shook down the taxpayer to bail them out. In the UK, the banks made huge mistakes, and they got the government to bail them down. In Ireland, they got the government to transfer all the bank's debts to the government's balance sheet, 100%, no questions asked. They're still paying off Anglo-Irish debt. They're still paying them out. So, you know, there's a lot of gefilte fish there.
They'll be paying them off for decades to come, Max. But look at the chutzpah happening in Europe, okay? Now, Greece, as we know, is the center of all these problems because of all these debts they can't pay. But who is the one that hid their debts? Who is the one that forced, basically, Greece to become part of the euro so that the euro could happen in the dreams of France and Germany? So, and yet Germany now is the one turning around and saying, Greeks reject German plan for EU budget commissioner. Greek officials have reacted angrily to a leaked German proposal for an EU budget commissioner with veto powers over Greek taxes. So obviously it was met with a lot of anger in Greece. Anna Diamantopoulou, a former EU commissioner and now an education minister in the Greek government, slammed the idea as a product of a sick imagination.
Well, they should use the Mel Gibson tactic. The Greek people. They should say, look, you know, we need a bailout. Give us a bailout.
Zero Hedge reckons that this demand that a budget minister from Germany be installed in Greece was bound to be rejected. Germany knew this. So that they say, Zero Hedge says, the next step is an epic LTRO, long-term refinancing operation in precisely 1 month, whose sole purpose will be to pre-fund European banks ahead of the Greek default with enough cash to withstand Europe's Bear Stearns.
Right, and it keeps them in the defensive mode in terms of deflation, because Greece is imploding. This is going to be perceived as deflationary, and therefore they need to keep interest rates near that 0%. Meanwhile, the fact that they are essentially siphoning off the income from Greece and these other countries through the back door, through the off-balance sheet, continually to pay the huge banker bonuses, that's not really talked about because they go with that headline crisis. Greek collapses, it's deflationary. Oh, by the way, we ended up with all the assets and interest rates have to remain at 0%. If, in fact, the market was allowed to function without this interference, you'd find interest rates starting to rise, and you'd see some losers in the banking sector, and you'd start to see capitalism return to the fore. But right now, you don't have capitalism. You have what's called some call corporatism, and I think we're going to be talking about that in the second half.
Or you could call it chutzpah.
I'd like to see Chutzpah traded on the exchange. You know, why doesn't Goldman Sachs take Chutzpah public as an initial public offering? You know, you could be like the symbol could be kosher. You know, I'd like to buy some Chutzpah. I think it's in a bull market. Why can't I buy Chutzpah? Why is the Chutzpah market being manipulated?
You came up with a new word, manipulated.
Exactly. Better take that public.
Well, okay. Now, the point is that part of how this Chutzpah economics works in terms of the Eurozone is that over and over, the nations like Germany and France that engineered this Chutzpah economic zone, they argue that to dismantle it, for any nation like Greece to leave the Eurozone, it would cost so much more. It would be economic Armageddon. Well, the report that will blow up the Eurozone. Yes, the PVV, a far-right party in the Netherlands, commissioned Lombard Street Research to examine the costs of staying in the euro versus returning to the guilder. Now, essentially what Lombard Street Research found was that the costs of breakup are wildly exaggerated and that the costs to the Netherlands and Germany in particular for staying in the euro are huge due to what they call unrequited transfers and lost purchasing power. Charles Dumas from Lombard Street Research says the Dutch people have lost thousands of euros in purchasing power per year since the currency was introduced. So a lower euro has indeed, they say, helped German manufacturing and exports, for example. But the actual German citizen, their purchasing power has been declining, the Dutch purchasing power has been declining, etc.
Yeah, well, the Netherlands, they track this in the paper. I love that. They say purchasing power, and they track it up and down. I've never seen any other country track that in the public press, which is fantastic. But the deal about breaking out of the euro, whether it's Greece busts out of the euro or some other country, the fact is that when interest rates are 0% as they are now, the costs are virtually nothing. You have to equate it to, let's say, a Facebook. Facebook is going to go public for somewhere in the $100 billion range. They have Facebook credits, which is a virtual currency that cost them nothing to issue, and they were able to create this multi-$100 billion franchise around that. Similarly, with other gaming sites, the globe has become essentially a game using a virtual currency that pays no interest. That's the key to a virtual currency, is that it pays no interest. The dollar, the euro soon will pay no interest. All these virtual currencies and global currencies pay no interest. It's a gaming currency. It's not a banking system where you put a deposit in a bank and then they use that as the basis for a loan. As Steve Keen has talked about, that's nonsense. There are no deposits in any of the banks worth anything. The collateral is nothing. It's negative reserve banking. It's all a gaming currency. Food stamps, it's a gaming currency. The bailouts, it's a gaming currency. 0% interest rates. You give away billions and billions. You hope that people spend this money online and viewing advertising, which gives some bonus money in the back end to the bankers issuing the gaming currency. But the entire idea of gross domestic product needs to be replaced with gross gaming product, GGP. And it's just a matter of which country's economic activity is providing more of a gaming output and virtual currency output than anything else. Goods and services are passé, and we're now in a post-GDP world, or in a post-sovereign currency world.
Well, going back to this article here, branding the monetary union a suicide pact, Dumas noted that the Club Med nations needed about 5% of gross domestic product in annual debt refinancing, more or less indefinitely. This means that there would be unrequited transfers, Lombard Street Research said, of about 60 billion euros annually from Germany, 50 billion euros annually from France, but these numbers were based on the condition that Greece and Portugal left the Eurozone. So this unrequited transfer would be basically to Italy and Spain.
Well, that's exactly my point. They're saying that you need a certain growth, 5%, to make up for this transfer payment. I'm saying that you won't have any growth. Everyone knows there is no growth. And the growth, as we understand it in goods and services, that period is over. They simply give this gaming currency away, whether it's a euro, a dollar, a drachma, and people use it online, and they view ads, and they boost a consumer economy, which is all fueled by more gaming currency. And as wages around the world go to parity, so that the global conflation of wages at the sub $4,000 per year mark, and we have a globe of gamers. That's the only economy left, and casino operators.
Now, finally, in the market for chutzpah, we had last week the Davos Forum. And I want to turn to this headline here, looking back at the Davos Forum. The quest for economic and social nirvana. Now, this came from a website called psychopathiceconomics.com. The subtitle of the site is Davos World Economic Forum for Bloggers. So they noted a 300% increase in the traffic to their site from Google searches. And it became quickly apparent that people are desperate to learn about Davos and what the elite are doing to quote unquote fix the economy. Some of the search terms people were using: Davos attendees, fix economy at Davos. Davos wants $150 trillion. Davos is a joke. City at Davos. Davos.
Well, Davos generated a lot of internet traffic, which generated a lot of advertising revenue for people to participate in the zero interest-bearing gaming economy. But there's no economic activity. Rubini was at Davos. He uttered some platitude, nonsensical, claptrap-related nonsense about how this was going to happen and that was going to happen, but all of his utterances are based on an economic model that is now obsolete. But what did happen was you had internet traffic, which got ad revenues generated from people who are basically trading in a gaming currency called the euro or the Facebook credit or the Hollywood dollar, which is the one I created back in the mid-90s, etc.
Well, and talk about Chutzpah, the co-chair of the Davos World Economic Forum last week was Vikram Pandit, the head of Citigroup, who saw the company become a ward of the state, essentially. Larry Summers, who destroyed the financial system, was almost single-handedly responsible for it. He was there saying, oh, capitalism needs to be reformed. Why don't I take over it? Now, this psychopathiceconomics.com says the clowns don't even know or are psychopathic enough not to admit that we don't have capitalism. If we had capitalism, we wouldn't be borrowing more than $1 trillion from communist China, bailing out the banks to the tune of $10.4 trillion. There wouldn't be bread lines at Walmart that are 46 million long. Unemployment wouldn't be at 23%, and kids wouldn't be living in cars. In short, we wouldn't be in the Second Great Depression.
Right, and look at Pandit for a second. Citibank. Look at Citibank stock. That's become a gaming currency. It was trading down below $1, down below 50 cents, 10 cents, a nickel. Then they did the reverse splits to get it back up, and they'll do another reverse split. Bank of America stock crashing, down to $5. We think it's going to go to 50 cents and below. So the stock in these banks are going to this gaming currency level of pennies per share. Meanwhile, the people who are responsible for issuing gaming currencies, like a Facebook or a Google or social networking, their stock is going up because they're in the gaming gulag casino industry business that is now dominating the globe. And as the incarceration rate goes up, food stamp goes up, gaming currencies go up. There is no GDP. There's only GGP. You heard it here first on the Keiser Report. Stacy Herbert, thanks very much for being on the Keiser Report.
Thank you, Max.
Don't go away. Much more coming away, so stay right there. Hi, I'm Max Keiser. Welcome back to the Keiser Report. Time now to go to Beirut and speak with Saifuddin Ammous, professor of economics at Lebanese American University and foreign member of Columbia University Center for Capitalism and Society. His most recently published article, co-written with Nobel laureate Edmund Phelps, is titled Blaming Capitalism for Corporatism. Saifuddin, before last week's Davos World Economic Forum, founder Klaus Schwab said capitalism in its current form is no longer fits the world around us. Larry Summers, also at Davos, claiming we need to reform capitalism. Your thoughts?
Well, I think I'd agree with them that what we have right now does not really fit the world around us. Where I would disagree with them is that they seem to think that what we have is a capitalist system. Although it is very clear for anybody who looks at what's going on that it's really not a capitalist system, it's much more of a corporatist system. And by a corporatist system, I mean it's a system where the government controls the workings of the market economy in a sense of deciding who gets to produce what, in a sense of putting priorities on economic production beyond that overstep on the individual freedom of citizens in the country. So in a corporatist system, you find the government interfering in order to save companies that fail under the pretext of their being too important or too vital for the working of the market economy. That is a feature of a corporatist economic system. In a capitalist system, companies that don't do well get weeded out. So the only companies that continue to perform and continue to survive under a capitalist system are companies that have demonstrated some success in serving their customers willingly.
Right. In a capitalist system, you have both risk and reward. And over the past 30 years or so, in the United States anyway, whenever a bank or a corporation experiences any kind of risk or any kind of loss, they lobby the government to change the financial laws to make it impossible for them to sustain any losses. Therefore, they're not taking any risks. They're just rent seeking. They're just vacuuming out cash, which leads me to my next question. The concentration of wealth in America and in Britain has grown rapidly unequal in the past 40 years as these banks and corporations simply vacuum up all the equity and take no risk. Does this matter?
Yes, I mean, clearly, these sort of economic systems, anytime you've seen them, and we've discussed previously the examples of Egypt and Tunisia, what they end up, they come under the pretext of being good for the economy, being good for the national greatness of the nation, or they always find nice sounding pretexts for why these interventions into the market economy are justified. However, the real consequences of it is always that it ends up really benefiting the status quo, benefiting the people who are in charge now. Now, the real problem with this is not just that it's not fair. The real problem with it is that it's very destructive economically, because what it means is that you keep the unproductive companies and the unproductive firms and industries, you keep them alive, and they continue to survive, sucking up valuable resources that would be used otherwise in society, and channeling these resources, capital, land, labor, office space, computing power, all of that stuff, they channel it into unproductive uses of capital. And the result of it, the product that they produce, is something that is obviously not desired by society, as evidenced by the fact that they fail on a free market. So by giving corporations the incentive to both be able to make profits and to make losses, you give them, again, the idea of risk and reward. There is always a risk associated with when you try to make reward. So if you take out the punishment, if you take out the risk, if you take out the possibility of losing from this, you're going to end up with corporations that are unproductive. And I think this is really the reason that the economies of the US and Britain, I would say, are stuck in a recession, because so much of the productive capital of the country, so much of the smart people, so much of the office space, so much of the computers in the country are being used in unproductive enterprises, in unproductive industries. And if these industries were allowed to fail, people in them would move on to other productive avenues of economic activity, and that would be much better for everyone in society.
Right, so you end up in Britain and in the U.S. with financial dictators. And meanwhile, in the Middle East, the dictator corporatists like Gaddafi, Ben Ali, and Mubarak, they've been overthrown more or less, or in the process of being overthrown, or there's this Arab Spring that's been going on. So what does this mean for the West, of course, the dictators in the West who rely on the resources that they were getting from the dictators in the Mideast?
Well, I think the interesting thing is to see how, if you look at a place like Egypt right now, we're seeing the revolution is continuing in this sort of struggle between the old order of the remnants of the Mubarak regime who are still in power versus the current versus the new forces that are being unleashed by the revolution. And I think one of the key issues that is being fought over is the issue of the loan from the IMF to Egypt. There's a lot of back and forth between the IMF and different members of the Egyptian government about whether those loans are going to take place or not, and whether they're going to be provided at low interest rates or not, and what sort of conditionality is attached with them. A lot of talk about it, but so far yet the Egyptian government has not officially taken on those loans. What's happening is that the rating of the Egyptian government is being downgraded by rating agencies, and the borrowing costs of the Egyptian government are getting very high. So people now are expecting a fiscal or possibly a monetary crisis in Egypt, which is, obviously going to be a very bad thing. The unfortunate thing is that this is being used as a justification for rushing through the IMF loan and for getting into even more debt, rather than people looking at it logically and saying, this road of spending and borrowing has brought us to the brink of disaster, and we should just quit this idea of continuing to think that we could borrow from outside in order to build our country. It has not worked for 30 years almost in which Mubarak has been in power. It has only served to enrich Mubarak and his cronies, and it has not brought development to the country. All that it has done is increase the indebtedness of the country and make people liable for paying more and more and more of their income towards taxes to go towards paying off interest on debt. And I think Egypt needs to make a clean break with the past, with these policies of the Mubarak era, from the respect of, particularly by making a statement on the debt. I think the foreign debt should be basically repudiated, and Mubarak should be made liable for it. And with domestic debt, they need to reach a sort of agreement with the domestic creditors that, you know, saves the banking system and prevents it from a collapse by recapitalizing the banks in case they have a problem with liquidity because of the treasuries. And then after that, you know, they must have a balanced budget. There is no alternative to fiscal responsibility. As you look at Europe and what is happening in Europe or in the US or in Arab countries, there really is no alternative for, as an individual or as a country, there's no alternative to being fiscally responsible. So the path forward is to eliminate interest payments as a massive part of the budget and reformulate the budget in a way that doesn't hurt the poor and in a way that stops giving favors to the connected people from the regime, and as a result leaves the budget being able to be balanced without having to resort to foreign borrowing. Because this is really the main problem. If you get involved in foreign borrowing, it leads to puppet regimes that don't have the legitimacy in front of their people, as Mubarak and Ben Ali's regime are, and it also leads to a massive, giant drag on the economy as people continue to generate more and more and more money that goes simply towards paying off taxes to go towards paying off interest on the debt.
Right, Mubarak is gone, but now it's time to overthrow the real dictator, that being, of course, the IMF. Now, we've had the Arab Spring, and then we've had the Occupy Wall Street movement. Now a new movement is taking shape around the world. These are protesters who are protesting against SOPA and PIPA, the Stop Online Piracy Act, and related intellectual property laws that are attacking the Internet from the corporate side. The corporatists want total control of the Internet. And is that a fair statement? Or is this a case of the corporatists who are attacking the innovators, the entrepreneurs, and the free marketeers? Do you see this playing out as an extension, really, of this global insurrection?
Absolutely. I think it's what we're seeing with the Internet is very interesting because as markets in the real world continue to be strangled and controlled more and more by the managerial state, by governments all over the world, the Internet is really the place where the free market has gone, because in the Internet, you can click anywhere you want, and you can decide to use any website you want, and people have the freedom of choice. And because they have the freedom of choice and their choices aren't enforced upon them, upon which website they should read, which website they should use for their email, they end up making these choices on the providers of these services that are, I would argue, better than what would happen if you had a central planner trying to dictate this to them under the pretext of some of the usual corporatist excuses. So because the Internet is a wonderful place where you can exchange all this information very freely, it leads to good information marketplace as well as a good example of a proper marketplace. What we're seeing with SOPA and PIPA is just a very strong attempt to try and bring in the power of the state from the real world onto the Internet. And so now the failure and success of websites will not depend on whether people want to click on them and people want to view them, but the failure will depend on what some particular bureaucrat decides in some position of authority in the government. So this, of course, it would be very dangerous, you know, from the perspective of the freedom of information, because what it does is it leaves the knowledge and the information that is available for members of society to be decided by particular people who get to know everything and then decide what you should be able to know. The optimistic thing about it is that the Internet is just, it's a very resilient thing, and it's really hard to clamp down on international connectivity. And, you know, it was very encouraging what happened with SIPA and SOPA, with PIPA and SOPA, in terms of actually alerting a lot of people to the reality of the problems with the intellectual property paradigm. The problem is much deeper than just these two acts, which are probably going to die in Congress now. The problem really is in state enforcement of intellectual property, which serves in a very pernicious way. It harms both the artists who produce the art or the authors who publish the books, as well as the fans or the readers who want to consume this material. Neither of them really benefits from intellectual property laws. They go towards the middleman, basically. And what technology is allowing us is more and more ways to cut out the middleman, more and more ways for fans to communicate directly with the musicians they like to listen to or readers with their authors. And this cuts out the profit that middlemen can make. And so this is why this industry is trying to bring in the government in order to keep their old antiquated model so that they can continue to keep their job as the middleman. And they want the state to enforce that. That's exactly the definition of corporatism. And so you see people like Chris Dodd going on about, you know, Hollywood creates jobs, or Hollywood is an important part of the U.S. economy. Well, obviously, you know, it's a tiny part of the U.S. economy, and it's a tiny part of the world economy. And you know, most importantly, it's very easy for them to find other business models that actually serve the artists rather than serve the old production industry that really is out of date and out of place today.
Okay, Saifuddin Ammous, that's all the time we have on the Keiser Report. Thanks so much for being on.
Thanks, Max.
All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank my guest, Saifuddin Ammous. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, Max Keiser saying bye, y'all.